Hello and welcome to this guide on understanding technical analysis and chart reading. In the world of investing, understanding the behavior of a stock is crucial to making informed decisions. Technical analysis is a method of evaluating securities by analyzing statistics generated by market activity, such as past prices and volume. In this guide, we'll cover the basics of technical analysis, how to read charts, and how it can be used in your investing strategy. Make sure to like this video to help the algorithm and subscribe so you don't miss out on our future videos. 10% of this channel's profit is dedicated to spreading God's Word through one of our other channels, Wealth of God Bible Teachings, which you can find linked in the description below once you finish watching this video, if that interests you. Most of that channel's profit is dedicated to charitable needs and changing people's lives who need it most. Now, let's begin. Technical analysis is a method used by investors to study the behavior of a stock's price, volume, and other market data to make informed decisions about buying and selling. Technical analysts believe that the price and volume patterns of a stock can reveal its future behavior. Technical analysis is used in conjunction with fundamental analysis, which looks at the underlying financial and economic factors that drive a stock's price. A newer field of analysis, called behavioral analysis, which looks at the human psychological factors that drive markets, can also be helpful in developing a holistic market view, and we will look to cover it in a future video. Technical analysis is often performed by analyzing charts of a stock's price over time. There are several types of charts used in technical analysis, including line charts, bar charts, and candlestick charts. The most common type of chart used in technical analysis is the candlestick chart. Candlestick charts provide a visual representation of price and volume data over time, making it easier to identify trends and patterns. Technical analysts use various indicators to help them analyze charts. Some of the most popular indicators include moving averages, Bollinger Bands, and the Relative Strength Index, RSI. Moving averages are used to determine the overall direction of a trend analyzed over various lengths of time. Bollinger Bands indicate volatility by plotting two standard deviations above and below a stock's moving average. The RSI measures the strength of a stock relative to its recent price changes and is used to identify overbought and oversold conditions. When used in conjunction with fundamental analysis, technical analysis can provide valuable information about a stock's future behavior. It can help you determine the overall trend of a stock, identify potential entry and exit points, and monitor the risk associated with your investments through various market cycles. However, it's important to keep in mind that technical analysis is not a guarantee of future performance, and it's always a good idea to consult with a financial professional before making any investment decisions and to look at diversifying your investment portfolio. In conclusion, technical analysis is a powerful tool for analyzing and understanding the behavior of a stock. By using charts, technical indicators, and a thorough understanding of the underlying financial and economic factors, you can make informed decisions about buying and selling. Remember to use technical analysis in conjunction with fundamental analysis, and always seek the advice of a financial professional before making any investment decisions. Thank you for watching, and we hope you found this guide on understanding technical analysis and chart reading helpful. Don't forget to subscribe and hit that notification bell to receive all our future releases, and we'll see you in the next video.